Good morning or good afternoon. Let me turn the video on and see. Okay, that is actually okay. I don't know where the hello, Brenda. That cough's still lingering. It's almost gone. Almost gone. Um, yeah, that virtual background I need to get back on here. So let's see if I nah, that's fine the way it is. I just cleaned out my office for the most part. So I've had to I had to rearrange things. It was getting nasty, so I had to clean it out. So I went down to bare bones, just so I'm back to normal. But then I just upgraded this machine a couple weeks ago, so the all the settings and stuff that were there before have disappeared. So I'll figure it out. I was trying to figure it out before we started, but I'm gonna go back and relearn, relearn. Excuse me. Uh, Hello, Kevin. How we doing, Helen? All right, ready to have a little fun again? We always have fun here, don't we? Certainly hope so. I'm only on cup number three too, so I might be a little, I might be a little slow today. Since usually I've had three cups by now, but maybe that's good, right? If I talk a little slower. She just left. Trixie, the Maine Coon, just left. She was up there on the router a little bit ago. Just before we started, she jumped down. So I don't know. Maybe they're getting fed. I don't know. I can't. No, the automatic feeder goes off at 10 o'clock, so it'll probably go off right when we start. Usually, they're sitting up there, and as soon as that thing goes, they can hear it as it starts, and they bolt for it. So it's kind of funny. But I set it up. I finally got smart with that. I had to reset it recently, and I set it so it goes off like 2 minutes before the market opens. So that way they're not here bugging me when when the market's opening and I'm trying to trying to trade. Excuse me. Well, let's get this out of the way. I'm not a registered broker dealer investment advisor. I'm not going to give you any recommendations or advice. Everything we do here is purely for educational purposes. If I do happen to mention a trade, just assume it is a paper trade or practice trade for regulatory reasons. We do not discuss funded trading. So here's what's coming up. We get Inner Circle, Mastermind Group, Trade U, and Monster Market Movers. Oh, holy cow. I just noticed that. I gotta call today's my dad's birthday. My dad's 83 today. I've been so busy this morning trying to get my office put back together. It's like I just realized it's like, oh, usually I call him in the morning time, but I have to wait till this afternoon. So yeah, it's crazy to think my dad's 83, but that's good though. So sorry. Free on long shows, Power Hour every Monday at noon, and then Trading Coaches Playbook, this one every Friday. Power Option plays Monday and Thursday. And then Cover Call Explorer with Trip on Thursdays, and Evening Think Tank with Brandon Monday, Wednesday, and Thursday. So, oh, nice, Brenda. Yeah, that's awesome. That is awesome. It's just I've been hearing too much. I just found out last week. My mom texted me asking if I heard about a guy that I graduated high school with, just turned 50 in September, and he died like a week and a half ago. It's like, what? How, what happened? So apparently he had he had some heart condition that he was on blood thinners for, and he fell at his house, and apparently he bled out because I don't know what happened. I mean, I didn't get any details, but she's friends with his niece, so or his aunt, his great aunt. He's her nephew. Whatever. I can't keep all that family stuff straight. So that was sad. Another guy, a couple years ago, my age. I mean, we graduated high school together and found out on Facebook that he passed somehow. So, but another friend, I texted him to see if he knew, and he's like, "No, I didn't hear about that. It wasn't on Facebook anywhere." Because my mom asked me that. Like, did you see it on Facebook? I was like, "No, it's not there anywhere." I went looking for it to see if there were any details, but there's nothing on there. So, and I didn't want to say anything. I don't know if his family trying to keep it private or what the deal is, but so it's just sad. It's a sad deal. So life is short. Enjoy it while we're here, right? So, and have some fun while we're here. So let's get back to that. Get back to something fun and positive. So, but there's all that social media stuff you can find us on. If we haven't met, which I think most of us have, but those are all the tools that I've got. Patterns of Flash, all about technical analysis. If you want to upgrade your charting skill, that'll be a good one. Weekly Whispers is basically just the analysis I do for my own trading every week. I just put it on just record it and show you what I'm looking at, my macro view, what I'm looking at, what I think about the market, what I think about the economy, which they're not necessarily connected, right? The economy and the market, people like to connect the two, and they are to a degree, but they're not, right? They can be disconnected from reality for a really long time. The market can go very, very long in what irrational exuberance, as Greenspan back said back in 2000, 99, 2000. And the market is wildly irrational at times. And then at other times, it's wildly irrational on the other side, right? People are filled with fear or they're filled with greed. And does it find equilibrium? It always does. It always does. The market will eventually find its way. So the question is, what cycle we're in? Where are we at the present time? And that's always the hard part to figure out. Nobody knows for sure, right? We can analyze things. We can try to figure out, go, okay, here's what I see. Here's this, here's this, here's this. And I haven't been bullish on this economy for 3 years, 4 years now. I mean, since, well, the bear market started in 22. It's the end of 21 when signs started showing up that we were headed south. And then 22, we went into a mild bear market. And then we bounced. As soon as the Fed rate cut rates or said they were going to cut rates, I don't remember if they said it or they did it, but the market bounced and it's been rallying ever since. Back in what, October of 22, I think it was. And yeah, I mean, which is understandable when you put all that stimulus in the economy and there's a bunch of money pumped into it. So, but there's a lot of things. If you dig deeper past the surface, you will find a lot of stuff underneath that if one domino falls, one big domino falls, it could change things very quickly. And things are starting to shift. When you look at the real estate market, I was just watching. There's a gentleman there's 3 or 4 guys I follow on YouTube that I found have really good info, good data. They share good data and they give good analysis. And um, so he was showing the distance, the chart between people's income, and I think it was housing valuations, and how they diverge. They usually are kind of static, right? They're in a if you put them on a comparison chart, they're kind of go hand in hand, but then at times they diverge from each other. And he was showing how back in 2006 there was a big gap between people's income and the valuation and the prices of houses. There was a huge gap there. And he was showing that right now, or at least 6 months or a year ago, in the last year or so, that gap was the same size, maybe a little bit bigger. So the housing prices versus people's income has gotten so out of whack that something's got to change. Either people's incomes have to go up or housing prices have to come down. They have to come back to equilibrium. And as of the last few months, the housing prices have actually started to drop off. In fact, he was pointing to a report by Zillow. Zillow puts out reports that 53% of homes nationally are now down from where they were a year ago, I think it was. I mean, they're down valuation wise. So more than half the country has lost valuation in their homes, which may or may not be a big deal. It just depends on everybody's situation, right? If your home is an ATM and you're taking money out of it, out of equity all the time, then yeah, this may be a problem for you. If it's just a place to live and you can make your payment, then it doesn't matter. But there's a lot of people, foreclosure rates have also jumped a bunch. There's a whole bunch of data there that's just it's indicative of 2006, 2007. It looks very similar. And in some ways it looks worse. So, and again, not trying to be negative Nelly, but at the same time, we have to, as traders, we have to look at the big picture. We have to look at reality, and we have to be prepared for what might come. If you just stick your head in the sand, you're never going to make it as a trader. If you can't look at reality. And the reality is this: I don't care about any of that information in the sense that I don't think negatively or positively. To me, in my mind, it's neutral. In fact, I see it as a good thing because any trade is an opportunity, whether it's up or down. And frankly, the market goes down faster than it goes up, right? There's the old saying that, the bull climbs the stairs and the bear jumps out the window. So I would rather, I think it would be healthy for our economy if we actually did have a big old dump here. It needs to be, we need to clean out the riffraff. There's reports out there that something like 20 or 30% of the Russell 2000 are zombie companies. A zombie company is basically, they can't, if interest rates change to a point, they're basically living off of credit. They're barely making it essentially, or they're in a place where if one little thing happens, they're going to go under. And the other thing, that's the other thing too. Bankruptcies are, I, I think I heard this recently too. In the last 3 or 4 months, bankruptcies are at the same level or higher than they were in 2020, especially for restaurants, which explains Chipotle. Chipotle was down last time I saw it was like $30 from what 90 or 120, something like that. Um, so yeah, bankruptcies are very high, which doesn't make sense, right? If the economy is so great based on the stock market, why are there so many bankruptcies? Why are foreclosures on the increase and not just a little bit, a lot, like 20% or something? Huge. Which part of that has to do, I know, with the rule with loan mods just changed. Because during COVID, they put in this rule you can do a loan modification and just you can do it as much as you want. You can do it every 3 months. And there were people that were literally doing it they wouldn't pay their mortgage for 3 months. They'd go to the lender and say, I need a loan mod. So they didn't start foreclosure. And the rules were so lax, they just kept doing it. I know a guy that did it 6 times in a row. He didn't pay his mortgage, and every 3 months he'd go do a loan mod. They just take what they owe and tack it on to the end of the loan to do this, and the government rules allowed them to do it. So they just kept doing it. But I didn't verify this, so look it up yourself if it's important. But I think in September is when those rules change back to what they used to be, which you could only do a loan mod every 2 years, I think it is, if you meet certain criteria. So all these people that in the last 2 or 3 years they've been doing these loan mods, they're obviously financially not in a good spot. They're going to start losing their house to foreclosure. I would imagine that's why the foreclosure rate has started to tick up. So we'll see. I mean, we don't know. The beauty is that there's opportunity everywhere. Whether the economy is good, bad, or indifferent, trading, that's the beauty of trading. That's why we're here. Because you don't want to be in that position where you're dependent upon the economy doing well in order to for you to do well. Right? We have the national economy and then we have our personal economy. I have no control over the national economy or the city economy or the state economy. A little bit, I may get a vote, but what does that do? Especially in this state, the state I'm in, where they just cheat. And you can call it what you want. But I've mentioned this many times. My neighbor's from Venezuela, and she's got a lot of friends that are from Venezuela and Colombia and that whole region of the world. And I know a lot of them. And one of them is, and they're all legal. She just became a citizen last year. So the one lady's mom, they finally got her parents up here, and she went to get a driver's license, and the DMV automatically sent her a voter's registration card. They sent her a ballot. Washington State's DMV is automatically enrolling people to vote, even when they're not legal citizens. She literally had been in this country for just, I think, 2 or 3 months. She has legal status, but she's not a citizen, so she can't vote. It's illegal for her to vote. Yet this state is literally because her husband was saying he was mad. I remember we were talking about it. He goes, "Yeah, we got a ballot in the mail for her to vote." It's like, where the heck did this come from? They just automatically register her, even though she's not a citizen and she can't legally even vote. So, well, yes, Washington State. It's the left coast. So, yeah, and I have no doubt. I think ballot harvesting is legal here too. So I wouldn't imagine they probably will do that as well. I don't know. I mean, I pay a little bit of attention to local stuff, but not a lot. But so yeah, it's just that's why I'd like to see do away with mail-in balloting. I mean, if your freedom is precious enough to you, then get off your butt and go down to the place and vote. Are there some people that can't do that? Yeah, but 99.9% of people can't. And you know what? They have DMV in this state at least has a program to send somebody out. If you need to renew your license, they'll send somebody out to you, to your location, and do everything needed to get it renewed. They could do the same thing for voting. I don't see why they couldn't. So, oh, I just saw your comment, Steve. Really? Didn't even know about the elevator when I was talking about the Bulls and the Bears. Yeah, exactly, Les. Well, there's the other interesting part too. There is a guy that I don't really, well, he gives good data on the real, and these are like YouTube guys that I've stumbled across, and if I like them, I'll listen to a few of their different, information they put out. If I like them, I'll follow them, and then, and this one guy is he's kind of a goofball. I mean, from a personality perspective, I think he's kind of a goofball, but then again, I am a little bit too. So, um, but he's recently had this guy on that has apparently tons of fraud in the system. I think I mentioned this here, where the local or city appraisers or county appraisers are colluding with the school districts because the school district's funding comes from property taxes, at least in this state. I imagine every other state probably is too. And so they're colluding with the appraisers to make sure that the appraisals come in high enough to fit their budgets. So the school districts say, we need this much money to come in, make sure that valuations come in at this level. I don't remember all the details of it, but he's filed with the DOJ. He's filed lawsuits against all these different entities. So he's taken a big national approach to it. It's really, really interesting to hear some of the stuff that he said because it makes sense. And that's the thing. They don't want that. If the housing market crashes, a lot of state budgets are going to have a big old hole. We've already got a big old hole because these idiots here spend money on useless stuff. They give people drugs, they pay for people's drugs and all this other stuff. It's idiotic, but whatever. Um, I think that's just in California, Steve. I think that's that crazy state. But we're probably the same. We're right on their heels. That's why our gas is still $4.50 a gallon out here. And a friend just filled up somewhere it was $1.78. We're still paying almost five. It's between $4 and $5 it kind of bounces, but anyway. Yeah, exactly. Oh, they catch people, Brenda. Actually, I met a guy, I think it was a year and a half, 2 years ago, and back in Philly. I was back there on business, and um, he voted. He came here in 2010, 2012, and he voted for Obama, and he got caught. His legal status was actually in jeopardy. He was trying to become a citizen. He said he had to start over because they somehow found out he voted. And now he doesn't like Obama. It's like, I don't know why I voted for that guy. I was laughing. It was funny, actually. But yeah, I mean, people do it all the time. And in this state, I mean, I don't know what they do, how they do it, but I'm sure that it happens. So, but let's get to the topic at hand, and then we will go play on some charts, trying to figure out why this market's still rallying and not dropping off, but or at least it should have some kind of retracement, but we shall see. This is interesting because a lot of times we think of this, right? We get into it's not necessarily that um, we think about it, but a lot of times we don't even think about it, right? And if it hasn't been pointed out to us, we don't realize, and then all of a sudden you have this aha moment. You go, "Oh, wait a minute, what?" These wins and losses are not equal, right? Seems like it, right? If you make 10% and then you lose 10%, is it the same? If you lose 50% and then make 50%, is it the same? Yeah. So here's the simple math example, right? If you start with $1,000 and you gain 10%, you now have 1,100, right? That's awesome. But what if you lose 10%? You're underwater. You've lost money. Net, right? You didn't just make 100, lose 100. When you put things in percentage terms, it changes the math big time. So it's one of those things that you can't treat them exactly the same. I mean, you can, but eventually it's going to come back to bite you, right? But here's the interesting part, and this is, as y'all know, probably, the psychological side of things is that's the hardest part of trading is keeping your head straight. Read the charts, analyzing the charts, option strategy, doing this, doing that, setting up systems. We'll talk a little bit about systems today, but that stuff it's learnable, right? It's something that you can, and obviously you can learn to manage your mindset as well. But those are static things that are, it's data driven, if you will. It's it's objective information, right? I mean, buying a call, buying a put, a covered call, those are static. They're the same, just like charts, patterns, right? Head and shoulders. Once you've gone through patterns of flash and you know all the patterns, then you know them, right? You don't have to go back and relearn them. You don't have to redo it. There's nothing to redo. Psychologically, there's a lot of it's a battle every single day, right? But here's the other big thing to do. The pain of loss psychologically is twice as powerful as the pleasure of an equal gain. So if you have an opportunity to make $1,000 or lose $1,000, you're obviously going to take the $1,000 gain. But if you gain 1,000 versus lose 1,000, how much more does that hurt? And the reality is that most of us would rather, and there's lots of this, and this is going back to that. And one of these days, I'm going to drill down on this data and get it and be able to explain it in a way that, what's that book? I mentioned it, I think, last time. Thinking Fast and Slow. About System One, System Two, and they've done tons of studies on this where if you give people an opportunity for a gain, 50% chance of a gain and then of 100% gain or um, gosh, I can't remember even I can't even enunciate it without putting it in writing. Um, it's basically that people would rather take a sure thing. Well, it depends on where they're at. If they're risk averse, they'd rather take the sure thing over the potential big gain. People that are risk seekers, people that like risk, would rather take the risk, even if it's the same odds of getting a sure gain of, say, 5,000 versus a 50-50 shot of gaining 10,000. People would rather take the risk to gain 10,000. They'll roll the dice on it because I haven't lost anything if I don't lose anything. Anyway, I'll get that one of these days. But the reality is that it is more painful to lose than it is to gain. But there's the fear of the greed thing, right? We sell the winners too early because we love to have a winner, right? You ever notice that dopamine hit you get? As soon as you have a winner, you close it out. You're like, yeah, you get all excited. There's nothing wrong with that. Okay? I know we're not supposed to be emotional, but the only way you're going to do that is to be dead. If you're not, you can't not be emotional. You're a human being. That's the way you were created. But what we will do is we'll hold on to the losers, hoping to avoid the pain of loss. That is why you're holding on to that thing. That's why, because you don't want to lose. Number one, you don't want to be a loser. Nobody wants to be a loser, right? Everybody wants to be a winner. So we get programmed early on that here's winning, here's losing, here's a winner, here's a loser. And if you lose money, that's a bad thing. You got to dump that belief, at least in trading, right? Because you're going to have a lot of losers. There's nothing wrong with that. It's not about each, but and that's part of the problem that we often run into. I know I have, is that we look at each individual trade and we don't step back and look at the bigger picture and go, okay, what's my overall account like? This trade I lost on, this one I made on, this one I lost on, this one I made on, but I made three times as much on these two over here that I lost on here. So I'm up 20%. Because we don't necessarily look at the big picture all the time. We look at each individual trade. It's like I want to win on every single trade. That's not realistic. You're never going to do that, no matter how good you are. Even if you set up a mathematical system, none of those are perfect either. In fact, any realistic algorithmic system, if it's better than 70%, it's like, something's not right. Because the best systems on the planet don't get better than 70%. Here's the other problem on the flip side of that. If you gain 10% and lose 10%, but if you lose 10%, right, you need 11% to recover that. If you lose 25%, you need 33%. The easiest one mathematically is if you lose 50%. If you have a $100,000 account, you lose half of it, you're at 50 grand. You got to now double that to get back to where you started. That right there is why losing, especially losing big, is so bad because it's hard to recover. Not only hard to recover financially, but mentally and emotionally is the hardest part. If you lose 50%, it's painful. But how do you bounce back from that? Or more? I mean, I don't. Well, actually, most of the traders I know that started back in the late 90s, they blew up their accounts. Most of them don't trade anymore. They haven't for years because they lost everything, all of it, or at least the bulk of it, enough of it to where they couldn't recover psychologically and stay in the game. Our goal as traders should not be to make money. Your goal should be capital preservation. Preserve the capital you have. Because how many of you have control over whether a stock's going to go up or down? Right? We don't, no, we have no idea. You can't control how far a stock may move in your favor. The one thing you can control is your risk. You can 100%, well, not 100%, but 99.9% because you have the potential of gaps, right? If you're, unless you're just day trading. But if you're holding overnight, you have the potential of gaps, but that's rare. It doesn't happen very often. At least unknown gaps, right? Like hymns. I mean, I got slapped a little around by hymns a little bit. Thankfully, I scaled out, so I was already profitable. But it gapped up and ran yesterday based on this news that came out. There was, some, I don't know if they merged or acquired, or they had some contract with somebody, or they did something that made their stock pop up. So thankfully, I was already out of part of it profitably. So even though I was upside down a little bit on the position I have left, I was still net net ahead. But I didn't know that was coming. There was nobody that, unless you have insider information, you don't know that stuff's there. But earnings and stuff like that, we can account for. Your main focus, and this is the funny thing, is in just the last few years, the more I focus on solely on my risk and forget about the profit, don't even worry about it, the better I do. Because I have control over my risk. I can't control how far the stock's going to move. And if it moves in my favor, awesome. Love it. But the one thing I have almost total control over is how much I have at risk. And here's the thing too, and this is I've just recently realized in the last couple of years that my mind's kind of just automatically doing this since I'm focused on it, is when the stock moves in my favor, I'm still 100% focused on the risk. I don't look, okay, here's how much I'm up, or here's how much more I could gain. I go, okay, how much do I have a risk? I'm up $2,000 right now. Do I want to risk that whole $2,000 of profit? Or do I want to scale that back? Do I want to lock some in and make sure that I don't get hit in case there's news, just like with hymns? This is one reason I scale. Because I look at it, I go, okay, if it gets to this point, I'm gonna lock in a 10 or 20 or 30% profit on this part of the trade, 10% or 20% or 30% of the position. And obviously it's all based on the analysis, right? But I'm going to lock in this because number one, I want to reduce my risk. I want to lock in some gains. I want to reduce my risk so that if an adverse event happens and I don't know it's coming, then it doesn't hurt so bad. All I'm concerned about in every single trade now is risk. Even when in the profitable trades, okay, how much do I have a risk? How much of it do I want to continue to risk? Do I want to take some off? Do I want to get out of some of it? Do I want to peel back the gains? If you will focus solely on risk, the upside will take care of itself. I heard that said somewhere. That's paraphrased. I don't know. I didn't say it the way the guy said it, but because he said it really cool, it sounded awesome. Which is a cool little cliche type of thing. Just focus on how much you have a risk and control that risk. No matter the position, no matter what you're in, no matter what you're trading, it doesn't matter. Control that risk and you'll be fine. Preserve your capital. Make sure that you don't have too much at risk. Because that's the thing. If you lose 10%, right, 11% is not that hard to recover from. But if you put way too much risk on the line, if you can't sleep at night, let's put it this way. If you want to know if you're risking too much on your trades, if you're sitting there and your knee is bouncing all day long, your hand palms sweating, your hands jittering, you're freaking out. If you got a Costco sized thing of lunch bags there so you can hyperventilate into them, if you're nervous on edge and freaking out about the trade, then you have too much at risk. If you're not in a calm, cool, collected mindset all the time about your trades, whether the market's open or not, if you can't look at it and go, okay, I'm good with it where it is, I'm comfortable with what I have at risk there. Am I comfortable with the risk that I have in this trade? That's a question that's going through my mind constantly. Whether I'm up or down doesn't matter. Whether I've just gotten into the trade or I've been in it for a month. If you can sit there and you're just calm, cool, collected, and you're comfortable with the amount of risk that you have on every trade, then you're good. And that is one of the keys to making sure that you make good decisions. Because if you're freaking out, you're on edge, you're panicking, and you're this and that, then you're in this fear mindset because you're afraid of what might happen. You're going to make a bad decision. And I still succumb to it once in a while, especially on day trades. If I'm intraday trading, it's like, oh, it's moving. And sometimes it works out, and sometimes it doesn't. Right? It just depends on the situation. But I have gotten caught in that where it's like, And the one thing you've got to learn to do is pay attention. Pay attention to your feelings and what you're feeling in that moment. If you're looking at a chart, say something moved in your favor and you're up 1,000 or 2,000 bucks. You're like, pay attention to how you feel. And if you're freaking out, like, I don't want to lose that money. I don't want to lose my profit. Then, okay, how can you adjust the trade to get to a place? Because if you're not calm, cool, and collected, and in a place where mentally and emotionally you can make a good decision about what you should do, then you need to go, okay, how can I get to that place? That's where I need to be. I need to be in this calm, cool, collected spot all day, every day. How do I get there? Well, this trade out here has done this and it's freaking me out. And okay, I'm up a whole bunch and it's like, I don't want to give back my profit. Okay, well, how do you adjust that trade? You could just completely close it out. But if you believe there's more upside potential, what if you give up that? Do you want to give up all the upside? Well, no, because you go analyze it, right? You're up 5 grand. You're like, woo, I don't want to lose my 5 grand. But I think there's another 5 grand there. But what if it comes back? Right, these are all things that are they're going through your head. And if you've been there, you know, because I've been there. As you noticed, I teach from experience. Like, I don't want to give back this profit. I'm not comfortable leaving this whole trade there because I don't want to give back any of this profit. So how do I fix that? How do I get to a place where I'm not freaking out about it, or I'm not worried about it, or I'm not, I want to be in that cool calm. So, okay, maybe I take half off the table. Sure, if it keeps going, I'm only going to make, and it goes to my target. Maybe my target's for 10 grand total, right? I'm halfway there. I want to make the whole 10 grand, but I don't want to risk the 5,000. So, okay, I close out half the position and it goes up and hits my target. Here's what the first thing you're going to do is, dang it, I should have left the whole thing in there. You're going to be mad that you left the 2,500 on the table. You missed out on another $2,500 of profit. You made 7,500 instead of 10 grand. But see, if you're only looking at that side of the coin, then you haven't experienced the other side of the coin, which says, you know what, I'm up 5 grand and something adverse happens, the thing gaps down the next day, and that whole $5,000 of profit is gone. And now I'm back to break even. And now you're mad because you had 5 grand yesterday and now you don't have anything. And then what do? You wait because you want your 5 grand back. You're going to hang on. They're not going to take my money from me. Right? That was mine. I want it back. And then it breaks down and it gets worse. And then you lose 5 grand. And then the pain gets enough. You're like, Whereas if you took half the position out, you go to break even, right? You still have a $2,500 gain. That happened to me on BNY just recently. Was up, thing moved good, popped up, did a nice little breakout of a triangle, moved up, boom, gapped up. I had a target sitting up there. It hit it to get, I think, 20 or 30% of the trade out of there at a 20 or 30% gain. I can't remember what it was. And the next day, some kind of news came out and boom, it popped down. And I'm like, with that news, I think it's probably going to keep tanking. So I closed it out at break even. But I had the profit from the day or two before where I'd hit and scaled out a part of it and took some profit. So even though I broke even on part of the trade, I still had a small profit on it. So the question, again, getting back to every single trade you're in, no matter where it's at, even when you're profitable, the question is, am I comfortable with the risk that I'm taking in this trade, including the profit that you have there? And how much more might be there? And the other question might come in is, especially if you're getting close to your target, is how much do I want to leave a risk to get that little bit more? I remember saying this to Amelia several years ago. We were talking about spreads, and I was like, if you're doing a spread, because I'm not a big spread trader, but she is, and I just threw the question out there. It just came out. I was like, well, if you did a spread and you collected $1 and you've already gotten 80 cents of the dollar, I mean, you've already gotten 80% of what you came for. Do you really want to sit and wait for 2 or 3 more weeks for the thing to expire? Even though, I mean, yeah, it might make sense you want to make the extra 20 cents, but do you want to wait 2 or 3 weeks to get it? I mean, if you get, and it wasn't like anything earth shattering, but it like hit her brain differently than it does, I think, for me. But she's like, well, duh. So you can trade spreads, you can do anything you want. But the question that I always come up with is, okay, here's what I'm shooting for. Here's my target. How close am I to that target? How much of it do I have? If I've already got 80 or 90% of what I came for, do I want to sit on that and leave the risk out there? Just like with MSTR. I mean, where's that? It's at 177. Well, I think I mentioned that because I saw Bitcoin. MSTR had a head and shoulders and then broke down and it was at 300 bucks, 327. And I did I hadn't done it for a long, long time. I've only done it once, I think, in the last, well, I've been at this for almost 26 years now. I only did it once, but I was like, I'm gonna do a bear put spread on this thing. And it was a buck and a quarter. I hadn't done one for a long time, so like, we're just gonna test it, just do a small position. Well, I ended up doing just three contracts. And 2 weeks later, I put an order out there that if it hits two of the contracts for whatever price it was, I think it was $2, then close it out. And that gets me my initial capital back. Right? It was only $400, $375 trade. It was a tiny little trade, but I'm like, I'm testing this out. Um, and sure enough, 2 or 3 weeks later, boom, went down and hit. So I got my initial capital back. And this is one thing too. I mean, you always have money. If you have a trade on, you have money at risk, right? But I look at it from the perspective of how much did I put in the trade and how quickly can I get my initial capital back so I don't have anything at risk. Capital One, for example, I did the same shortly after this. I did this one because it was working out well. I'm like, okay, I see this one too. Well, Capital One, I did the same thing with. I've done this with three or four different big, high flying volatile stocks, right? Um, Go do that, put an order out there to recapture all my initial capital, and then I can just sit on the rest of it and let it be. Like Capital One, the thing's popped up big time in the last 2, 3 weeks. I don't care. I got all my initial capital back. I think I've got two contracts sitting there. So if between now, I think it's for January or it might be March even. I don't remember how far I went out on that. Um, but if it happens to drop down and go below both strike prices, then I max out my profit. And I mean it's two. Actually, I think those are $10 spreads. So I think that's $2,000 of potential. But I have all my initial capital back, so I don't really care what happens with it. If it goes to zero, it's not that big of a deal to me. I mean, there's money there, and I could take it off the table and have that little bit that's there, but I'd rather just let it sit there. I don't have any of my initial capital at risk. So I'm totally cool just letting it do its thing. I don't care. So if you can find trades that give you that opportunity where you can get all your initial capital back, preferably quickly, and then you can settle, because that's one place. And you'll notice too, if you scale out of trades, you'll notice that you get to a very comfortable place when you've already peeled out of stuff. Right? Like Rubrik's one. That's what I've been trading the last 2 or 3 months. And I've been in and out several times, pull a little bit of profit, it bounces back up or reload it, pull a little bit of profit, boom, boom, boom. And then they had earnings come out yesterday or this morning. And I had enough profit on all those positions that I decided to leave. I'm just going to leave one contract. The last time it dropped 25% after earnings, last quarter. I thought even with just one contract, if it drops 25%, I'm still going to kill it. And I made enough money on all these other contracts, all these other trades. I'm just going to leave one there and take the risk, right? It's kind of gambling, but at the same time, if I've already got all my initial capital back and I'm already profitable on it, is it that big of a deal? And then I look at it, okay, the options, I think they were $6. I'm like, all right, I'll take a $6 risk. I mean, in the big scheme of things, it's $600. It's not a whole lot of cash overall. But the one thing I've also done is, and this is another thing too, is that it's important to get your mind into looking at things from a percentage perspective. Because I have a lot of trades. I mean, I do 1, 2, 3 contracts. If I'm scaling into something, if I'm scaling out of something. So it's not like all my trades are monster trades. A lot of them are really small, actually. In fact, I very rarely max out because I have the 10% rule, right? Where I don't put anything more than 10% into one trade. I very, very rarely max that out. It's usually significantly smaller than that. But what you've got to do is shift your mindset so that as your account grows, much like the percentage things we're talking about here on the screen. That's another thing too. If you have a $100,000 account, you take a 20% hit. This is why as your wealth grows, and they've done lots of studies on this too, as your wealth grows, you get more risk averse. Because a 20% hit on a $100,000 account is 20 grand. It's not a huge chunk of money, but a 20% hit, it's the same percentage on a $10 million account is $2 million. That's huge, right? Dollar-wise, it's huge, even though percentage-wise, it's the same. And I've made this statement, I've made this argument before, is that you have to shift into a percentage thought process. But as your account grows, you're not going to be putting 10% at risk on a $10 million account. especially on an options trade. Put $1 million in an options trade? That's nuts. I mean, you could. If you got big old stones, you could, but if you lose, and if you're willing to take that risk, then go for it. And if you don't care, but I guess I mean if I had $100 million account, then $1 million I might do, but that's only 1%. See, percentage wise, it's not huge, but that's a far different from 10 million, right? 10 million is like a decent start. 100 million is like, okay, I've arrived now. Um, it's hard to fathom, huh? But it's really not. I mean, especially when you start looking at trading and when you get to that point where you're starting to grow consistently, then it's like, okay, yeah, that's possible. So here's some things. Now we'll get a little bit into systems and building systems. Oh, there's okay, good. My clock up there. And there's a million different systems out there, right? You can create whatever system you want that works for you. And it's an important idea to systemize your trading. And when I mean systems, it's, here's entry, exit, here's what instrument you're trading, here's what you're doing, here's the strategy you're employing, here's how much risk you're willing to take, like 10% rule. You can make it 2%, you can make it 20%. I wouldn't go above 10 myself, but you can make your rules whatever you want them to be. Say, here's my guidelines and here's what I do, right? And the goal should be to, well, your goal obviously should be to be profitable, right? But in reality, it's not. The goal should be to minimize your risk. There's the expected value, right? Which is your probability to win, the percentage of trades that you have that you win on, times your average win size. So the average dollar amount you make and the percentage of wins you have. Subtract that from the percentage of losers you have times the average loss. And that's what's called your expected value. That needs to be a positive number. If it's a negative number, if you have data on your trading account, you can go pull this data and run the numbers. And if it's a positive number, then you're good. Whatever you're doing, your system's working. If you even have a system, right? But whatever you do is working if that number is positive. If it's not, you're going to go broke eventually. Then there's a payoff ratio, which is basically, how much your average win size divided by your average loss size. This is the ratio of how much uh, you're up versus down. Well, here's the thing, and I want to make this, and I made that note there, depending on your system, right? Because there's lots of trading systems out there. A lot of these algorithmic trading systems, they are very short term. They're scalping, right? They might be doing arbitrage trading. There's all kinds of different systems. Some are mean reversion trades, which are smaller. You usually have a higher percentage of winners just because you're taking a smaller profit. Because if you get in and out quickly, the odds of you can just take the average true range of a stock. They say, okay, this thing moves $3 on average in a day. So I have basically, if you're just trying to capture one of those $3, you have pretty high odds of doing that, right? If you only need a third of the move and you get in and you get out quickly and you grab a small, 5 or 10 or 20% gain, you're going to hit that quite often. In fact, on the Trade Watch alerts, last month I did, which I really, since I started doing that a year and a half ago, it used to be doing a lot more trades. Now I've gotten a lot more patient. I think I only did 9 trades last month. Only 2 of them were losers. So is that 75, 78% or something like that were winners? But that's because the goal is just to go capture 10%. And I've gotten pretty good at recognizing good solid setups because I do a little bit of day trading, but not much on stocks or options. But so yeah, I mean, last month was good. Last 2 months have been, well, I think it was just right around 10 grand last month on 9 trades. The month before was 10 or 9 or 10 trades. I think it was 8 or 9 grand or something like that. So again, just doing 10 contracts, and that's it's Trade Watch alerts. It's just the morning time trade that you look for. I go find 3 candidates, something that it's all based on candlesticks. Looking for a candlestick pattern at a support or resistance level at some kind of significant level that might continue to run. Um, so yeah, but everything else I do, my swing trading, my position trading, is a 3-to-1 risk reward ratio, mainly because I want the odds on my side. So define your risk, define your reward, depending on what you're doing. If you're scalping, you're doing day trading, you're doing short-term trading, then you're probably going to have a higher percentage win ratio. A lot of the like the mean reversion type of systems and the scalping systems, they have you take lots of little winners, but then eventually you will have a bigger loss. The key is to making sure that the numbers work. Because if you have a whole bunch of $1 winners, if you get say 10 winners and you hit, you're at 80%, or you have 10 trades and 80% of them are winners, you make $8, and then you have two to go against you, you lose $3 on each. Well, that's $6 of losers and $8 of winners. You're still positive, right? You're still up $2. So nothing wrong with either one of those ways. You can trade however you want. What you have to do is figure out if your system is profitable or not. Because a huge win ratio doesn't mean squat. Because if you do 100 trades and you get 95% of them, you make a buck on, you made $95, but if you lose $50 on the other five, you lost 250. You're still negative. So don't get too focused on the win-loss ratio. That doesn't mean a lot. There's a lot of these other ratios they used to do in the hedge fund world and the investment world. There's the Sharpe ratio, which because some people will say, well, I made 10% in this system, but you only made 8%. Your system's better because you made 10%. Well, that's a shallow, superficial view because 10% with how much risk? If you had the possibility of losing 50% of your account, or if you had a 50% drawdown and you're freaking out because you start with $100,000 and it went down to 50 at some point, but when you closed the year at 110, okay, you made 10,000. The other guy over here had a 20% drawdown, and he had 100,000, it dropped off to 80 and closed at 108,000. Well, which one would you prefer? Do you want to suffer through that big giant drawdown and lose 50% and make 10%? Or do you want to have a less volatile system where you're not freaking out like, ah? So your return should be based on how much risk you're taking as well. Because if you have to take a lot of risk to make 10%, do you want to take a lot of risk to make 10%? Or do you want to take less risk to make 8%? A risk adjusted return, they call it, right? So it's how much risk you have to get to that return. That's a major factor. Because it's easy especially with options trading, with the leverage we get, when you get big moves, you could double, triple your account in no time. But you can also blow up your account in no time. Because risk is a double-edged sword, right? It's one of those things that can go either way. And if it goes against you, it's ugly. All right. Finish this up and then we'll go spend a few minutes looking at charts. Your brain's bias, right? The loss aversion bias leads you to make bad decisions. So if you focus on your risk, you say, okay, I don't want to lose this money. I want to protect my capital because you might go through a streak of losers. I did the last couple of days. I'm not trading at all today, not any day trades. I'm just managing what I have, my swing trades that I have on right now, which I don't really have to do anything. They're just all kind of ho hum. But the last couple of days, it was like I made a couple of stupid decisions. Minor, I mean, they weren't bad, but the other trades I did were fine. They just went against me. And so the profit that I had from the previous week or two, I gave back. And I'm like, ah. So I'm like, I'm not gonna trade it all today. I'm gonna let my brain rest, let my emotions settle down, take the weekend, recoup, get my mind back into, okay, this is just you go through bad streaks. Look at any sports, they all do it. You go through a bad streak and sometimes you sit it out and sometimes you get back in the game. I grew up watching Gary Payton play at Oregon State. I remember him getting interviewed one time. I don't know why it's always stuck with me. He just went through a cold streak. And some guy interviewed him afterwards and said, were you, I think I might have been there. I think that's why I did. But, because we used to go down on the court and I got several of his autographs when he was in college. And, he asked him, you had a really cold streak there. And he goes, well, you got to keep shooting. They're eventually going to go in. But I mean, if that's what you do, if you're a basketball player and you got to shoot the ball to score, you can't score if you don't shoot. So you just got to keep shooting. And you're going to have those cold streaks, and then you got the hot streaks, and you're going to have everywhere in between. So if you get on a cold streak and you're having things go against you, and it's like and you find yourself mentally and emotionally like freaking out, or you're in a spot where you realize that I need to slow this down, right? You know, don't want to get into revenge trading, right? Um, because that's bad. So you gotta keep your mind in the right spot. And if you recognize that it's not in the right spot, or if you're on edge, or you get into that spot where you're not calm, cool, and collected and can make good decisions, then figure out how to get yourself back into that zone. Um, that's the most important thing to do because when you're in that zone, then you can focus on when you're not in the freaking out, loss aversion, making bad decisions mindset. When you're calm, cool, and collected, you can make good decisions and you can focus on your risk and not worry about the rest of it. Excuse me. The last one there is stop asking how much you can make and how much you can lose. Focus on your risk. That's really all you have control over. You don't have control how far it may or may not run in your favor. And the beauty is, are you going to be upset if it runs way more in your favor than you thought? No, of course not. But if it goes against you way worse than you thought, that's going to have a massive negative impact on you. And again, you got to protect your mindset. You got to protect your head. That's the most important asset you have right there. Protect it with your life because it is your financial life depends on it. Because you will, if all you focus on is profits and you don't focus on risk and staying in a calm, cool, collected place and managing and maintaining your emotions well, you will eventually lose in this game. You'll eventually give up. So you got to focus on what's between your ears. So, how did that get out of whack? There we go. All right, we got how much time we got, Brenda? You're my timekeeper now. 6 minutes. I started a couple minutes late, so 7. Who taught you to do math? I got this down now. I got the. It just ticked over to. You were probably typing before it ticked over to 54, huh? Um, anything you guys want to look at? You want me to analyze real quick, or let's go see. I'm just curious to see what. This is from my weekly whispers last week. This is the list I had. That one's obviously not playing. I'm just curious to see where they're at. I haven't looked at them for a minute. There's one that frustrates me. You ever miss you ever miss a trade and be like, well, there's one right there. The beautiful inverted head, and this is why I love patterns. If you don't know patterns, then this is why you need to get patterns in a flash because this has been sitting there for a few weeks now. This is on the list from last week. You can see it's a weekly whispers, the WW 1128. Um, I didn't catch it, which is irritating. I always hate that when I go back and look at it if I haven't watched them closely. Which this week I had another project I was working on, so I wasn't watching things as much as I should have. Um, so it's always irritating to see this when it moves. I mean, it went up and hit the 3 to 1, 2, 3, 4 days. It's like I missed it, but I miss them all the time. You're gonna miss them. You're gonna miss them quite often, actually, and it is frustrating, but it's the nature of the beast. The key is to focus on the ones you do catch. Just like I use baseball all the time, right? How many times do baseball players sit around and talk about the pitches they missed? They didn't swing at it. Like, I should have swung at that one. It was a home run pitch. It was a perfect pitch. And I watched it go by. And there you go. That happens in trading too. So you got to get again. That's another mindset thing you have to overcome is getting rid of that fairy tale idea that you're going to catch things. Even though I mean that one had a perfect pattern and I should have caught it, but there's 34 on this list too. So and I do catch those, just not all of them. What was I just going to say? There's something that hit my brain that I can't remember. Netflix is beautiful, unless you own the stock and then you're not happy or you have calls. I'm content because I have a bear put spread on this thing. This is one of those that it was up. I mean, it was before the split even because there's a beautiful descending triangle here. If you didn't see it, this is another reason that if you're not seeing these patterns, go get patterns of flash. That's for sure. And I mean, it's about as textbook as it gets. Now, normally it's a continuation pattern and a downtrend, but the pattern's still there, and it is a bearish looking pattern. And if it breaks that 114.60 area, which is a support, odds are it's going lower. And then it came back and did a textbook roll reversal. This is the beauty of charts. And I don't understand people that, that stuff doesn't work. It's like, yeah, right. Okay. So you got a beautiful pattern. It breaks that 114.60, 115 area, comes back up, taps it, and then turns over and tanks. Happens all the time. All the time. I mean, is it 100%? No, of course not. I mean, look at it here, right? We get this big giant rally. We find that 115 area of resistance. We stall out, little mini double top, break down, and then break out of it. And guess where it digs in? Right there. Guess where it dug in? Dug in right there. And then when it failed, guess where it went? It's because there's things called anchors, right? We have mental anchors. Usually we anchor on the price that we get into something. But you know what? A lot of people anchored themselves in this 115 area. People that bought right there, people that bought right here, excuse me, people that bought right here were ecstatic up here, right? For about a week or two, they were ecstatic. And then, is that, I don't know if that's earnings or not. I don't know what caused that big drop. I'm guessing that must be earnings because the volume spike. All of a sudden, they're not happy at all. They're like, they're freaking out. The split's over here. Yeah, that's not the gap. Because if we unadjust, there's the split. That gets crazy. Yeah, it was up 1100. This was, I'm pretty sure it's earnings because the big volume spike is most likely earnings. So everybody that bought in this area, or anybody that even bought back here, they bought back here, it rallies up, and they see it, they're up, what's that, 10 points, they're up 7, 8, 9%, comes back here, they're like, and it goes up. Or for anybody that bought here, all the people that bought in this area right now are freaking out. They're like, So if they bought around 115 somewhere in here at the support, and it gets back up there, guess what they're doing? I just want to get even. I don't want to lose. So they bail here, and it creates that roll reversal. It's beautiful. But as far as where it's going, I mean, it looks like it's going down to about 93 and a half. That's the next support level. And they're getting hammered today because they apparently won the bid to buy, was it Paramount or something like that? I wouldn't chase this at all. I mean, you could, but there's a lot of risk there. That's why I wouldn't chase it. Because it did. It gapped down this morning, then it rallied. I mean, it literally gapped down to, I got it here, 98, and then it ran back to 104, 105 in the first half hour, 45 minutes, hour, 55 minutes, and then it turned over right back to where it opened. As you can see, I'm in the shadow there. So, um, yeah, I mean, is the risk worth chasing it? I don't think so because it's in the middle of that range. The next spot is about 94. And it looks like with the momentum it has, it's probably going to get there. I mean, something could happen. News could change its direction. But just based on the chart, what it looks like, yeah, it's likely to go down to 94. Now, I mean, if you want to chase it, you could. I would make sure I have a really tight stop, but I wouldn't. I would just let it go. You're going to miss trades all the time, and it's not that big of a deal. I mean, it is, but it's not. It's frustrating, but um, oh, Warner Brothers, yeah. I'm gonna hit these other ones first. I'll get the spiders of gold last, Brenda, because that's, I mean, it's just same as the market. But let's see. AAOI, Applied Electronics. Um, hmm, this that one's challenging. Um, well, yeah, interesting. Here's where I had this trading plan. Well, there was kind of a double top here. I'm pretty sure that trading plan was from back there, so I'm gonna get rid of that because we don't need it anymore. And here's something I don't do this often, but when I see moves like this, because well, I'm not a fib guy, but I have used this recently a few times to just the 50%. And I'm looking at it going, it's probably around 50. It's okay, it's around 38. I understand the basics of fib. I'm not deep into them like Rob. I don't use them on a regular basis. But sometimes I look at a move and I'm like, okay, let's take a peek at it and see what it looks like. And then if there's something else that coincides with it, okay, you've got multiple pieces of analysis now that say, you know, the odds are this is what's going to happen. That's all I'm looking for. Is looking for odds. But you got to be careful and make sure you balance that out. You don't just go hunting for something that's going to tell you what you want to hear. You don't want to get locked into a confirmation bias because that's very common. That's what a lot of it is. Confirmation bias is so common it's not even funny. where you look only for pieces of information that will confirm what you already believe. You've already made a decision on this. You already believe X, Y, and Z, and any information that comes into your brain that contrasts it, that says something different about it, oh no, you can't accept it because you've already decided that this is fact or this is truth, and I'm only going to accept information that confirms that belief. You see it in politics all the time. People have a hard time changing if they get new information. Changing their belief or changing their opinion is difficult for most people because they want to believe what they want to believe, regardless of fact. So my brother's like that. I love him to death, but it's like, what? It's like, all right, you believe whatever you want. Here's the facts. Now, you want to kick those facts out the door and pretend they don't exist? Have at it. But I live in reality. So anyway, um, yeah, this is a tricky one. I mean, it's kind of there's a little bit of, and those dash lines are, their support and resistance levels. It's kind of stuck right there at 26. The question is, will this little move we had recently are we just stalling out? We're going to continue from here? And the volume's not really telling us much. I mean, this downward move had quite a bit of momentum. You see, look at the red bars. You can see the size of those, and there's a bunch of them in that period. But when you look at volume here, there's only that one big up day had a lot of volume. The rest of the days have been pretty light, which this is Thanksgiving week, so we got to remember that too. So the light volume is normal on a holiday week. There's again, this is something kind of in the middle of the range, but it is, you could call this a little flag type of pattern, pennant, whatever. Because when you get a big move like this that's quick and then it stalls out, will that momentum continue to break north? I mean, if I was really thought that that was the case, if you really think this is going to go higher, I would trade a break. If it breaks above these levels somewhere, I'm going to pick a spot, and I would look at, this maybe being the target up here. Hey, I'm just doing this as an example, just throwing out. I would say, okay, I'm going to get in. The first thing I do is risk, and you can see there the stop is where my pencil is on that. I'm always looking, okay, where am I going to put the stop? I'll put the stop in first. I'm going to go just below the lows. These, I mean, 1, 2, 3, 4, what's that, 7 days? There's 2 days that dip below it. You could go way down here, but so I'm going to put the stop, say, okay, slightly below that level, which was that 25 and a half, 25.47. Want to go below most of these days. So if it breaks there, the odds are it's probably going to keep going. So if that's the case, I don't want to be there. Now I can adjust once I've figured out where my stop is, right? Controlling my risk. That's number one, control the risk. Now I can adjust this. I can come up and grab this entry spot and I can adjust it to whatever I want. You can see I've got a 1-to-1, 2-to-1, 3-to-1. 3-to-1 is usually what I'm looking for, but in this case, I would put the 4-to-1 up here at the higher target. And then I'll scale out. And I use that visually to be able to say, okay, we're already, we're 25 or a third of the way to my 3-to-1 target. We're 25% of the way to the 4-to-1. Do I think it's going to keep going here? If this thing takes off to the north. And I get in at 27.78. It runs up to 29. Well, 29 is a pretty significant resistance. I've got a little bit of profit. Do I want to take some off the table? What's it doing? Maybe it blasts right through it. If it blasts right through this level, hey, cool, I'm good with that. If not, if it just comes up and taps it and stalls out, okay, maybe I want to take some off it. So let's see if there's anything indicator-wise that tells us anything. Not really. It's stuck between the 50 and 200-day moving average. So yeah, the only thing I see there is the potential for that pop to continue up to about 29 or 30. And if it breaks north of there, say if it runs up to that 29.60, 29, 2030 area, I'd be tight in my stop, probably put my stop at about break even. I'd probably scale out a part of it just because I don't see it really strongly blowing past that. Barring any kind of news or something else that happens, right? But just looking at the chart. What is WBD? And then what is this thing? Oh, Warner Brothers? Oh, yeah. Why are we looking at this? Did they just get bought out? Yeah. So they're going to be gone soon enough. There's a spiders, little head and shoulders, kind of. Um, it's kind of good. Well, depending on where it closes, I'd still consider this more of a double top now that we've basically come up and hit that level. If it would have rolled over here, we would have had a beautiful head and shoulders. Right now, we've got the beginnings of a double top. It obviously hasn't materialized yet, but if it rolls over from here, we have a nice double top, and then the midpoint would still be right there. So if it closes down from here, then We would technically have a head and shoulders, even though the right shoulder is basically upright with the head, so it would be double top. Either way, they're both bearish patterns. Unless it breaks north. If it breaks out of here to the north side, then that changes things. That negates the entire bearishness of it. But and there's one thing we were, well, if you're not familiar with dirt, you see the price going up, right? And this is one thing that the last, especially the last 2 or 3 months, has had me a little like a little skittish. Not necessarily skittish, but just prepping for the downside. Is you got MACD just trending lower. As the price is continuing higher, MACD is trending lower. So this tells you that internally things are not as healthy as they look on the price chart. So there we have it. I didn't miss any, did I? Oh, GLD, but that's going to be, again, that's just the other. There's another reason for patterns. There's a beautiful ascending triangle. There's your traditional ascending triangle that you're looking for as a continuation pattern, right? This is a little choppy because it's gold, right? This is the gold ETF, so it's based on gold prices. So the open is it's gappy because it moves based on what gold did overnight. But there's a beautiful, just a traditional ascending triangle. You got one, two, three, four hits on it on the top side. Nice little slightly uptrending slope, and then boom, it breaks out and just. I mean, the measured move was 23 points, and it did that in a matter of a couple of weeks, and then it went way beyond. It went from 315 to 400. There's the beauty of patterns. That's exactly why if you don't recognize, if you don't know patterns, you need to. Again, get patterns to flash. If you haven't done it, you need it, and there's why. I mean, well, there's AIG. There's that little head and shoulders kind of. Ooh, American Homes for Rent that got slaughtered. These are all the ones I was looking at this last week. There's AR. Oh, dang it. It's all right. I miss trades all the time. It still bothers me. There's a descending triangle in Baba. Again, it's not traditional where it would normally be. There's the beginnings of a head and shoulder on BE. There's a head and shoulders on BN. Citigroup broke out. There's an ascending triangle. Another one. These are all ones that I highlighted last week. And now it's 104, 105 was it's up 4 points already. So that would be profitable if you were in it. CG, there's another one, little double bottom, breaking out of the midpoint. Textbook double bottom pattern right there. There's Chewy. That's still sitting there, big old head and shoulders. There's a failed head and shoulders. There's Colgate. And well, see, here's what's funny is you have to, this is where holy cow, it's 10 after. Um, this is where you have to make sure you keep your memory straight. That's another thing I've talked about in the past is this thing broke out. Little inverted head and shoulders. It's not a very pretty one. It's kind of ugly. It broke out, but it didn't do with much volume. So the odds of that continuing are pretty slim. So I didn't get into this, which I'm happy I didn't. So you're gonna have those ones where you miss it and you're like, and then you have the other ones you're like, okay, I didn't get into that. Good. I'm glad I'm not in that one. There's a lot of these I'm glad I'm not in. There's another Columbia Banking, another ascending triangle that's working out right now. CRM's a head and shoulders just not working out. CSX is a little head and shoulders that did work out, got halfway to the target, and then turn around. Again, some of these are double bottom on DraftKings with the right cheek up. Big old bullish engulfing pattern, catapulted it, then it pulled back a little bit, broke out of the midpoint right there. Entries at 32, it hit 36 this morning. So again, that would be profitable. You'd be up on it a little bit. Here's Duke Energy, beautiful head and shoulders, tanked off, is dropping like a rock. That's lovely. There's one that's not, or Fifth Third Bank. This is another reason to use plans though, right? Because if you just get into this before it breaks, there's a perfect contrast. Fifth Third Bank has rallied. There's a head and shoulders there, but it's actually been negated. But Duke Energy had a head and shoulders fairly nice, and it's getting hammered. So you'd be in that one and out of this one. That one's kind of a. There's him. There's just a simple like. Here's a support level that's major, and if it breaks there, it's probably heading lower, and it has been. So that's working out well. Invitation Homes that didn't break out north, so you're not in the trade, right? International Paper, not too exciting. There's a head and shoulders kind of. It's still in play right now, but we'll see. Microsoft had a kind of a double top, if you will. So not a perfect one, but broke down below that 500, that 495 area was support. Nice little roll reversal on it. NBIS, just another double bottom that it broke out, but now it's dropped back off today. So another one where like right now, I'm glad I didn't get into that one. There's Palantir, little head and shoulders on Palantir. It's bouncing back right now, but notice the volume down there. If you look down at the bottom, the volume is getting lighter and lighter each day, which means the bulls are not coming in with a whole lot of force. The bulls are not that excited about running this thing higher. They're moving it higher because the bears aren't here. But if the bears show up, yeah, bulls are going bye bye. There's SLV. That's the silver ETF. Another pattern, beautiful symmetrical triangle, beautiful trend, beautiful symmetrical triangle. Boom, it breaks out, takes off. Odds are that's going significantly higher. There's SoFi is just today forming that right shoulder. So there's where it gets interesting. So this is the 20. I just put this on here. I didn't. It's not a trader. This is a 20-year treasury, and the 10-year, 20-year, and 30-year are all in a head and shoulders pattern. You can see it's breaking down just today. It broke it yesterday, closed below it yesterday, the neckline, and now it's dropping off today. So the bonds, the 10-year bonds are what, for the most part, control mortgage rates, and they're up a bunch. It's at 4.4143 right now. So when the value of the bond goes down, the interest rates go up. So interest rates are going higher right now. I mean, it's tiny, but if this head and shoulders plays out, the bonds go down in value. I mean, this is the 20-year. It goes back to 34 and a half. That's going to pop interest rates by a point or so, I think. I'm not that deep into that side of things, so I don't know exactly, but I just find the patterns. And if the patterns say this, if the bonds are going to go down in price, which could be bullish for stocks, right? If people are unloading bonds, if they're selling off their bonds, they're going to put their money somewhere. They're going to put it into stocks, which I think is part of the reason that equities are going a little bit higher right now. But at the same time, if bonds crash in price and the yields go higher, which is what happens, it means interest rates go up. That means the housing market's going to get hurt because people can't afford houses already, which bodes that means that the housing rates are likely to, I mean, the housing valuations are likely to continue to drop, especially if interest rates rise, which is what I see happening. I see interest rates either going up or staying where they're at, and it's not affordable. So either prices have to come down or interest rates have to come down, and I don't see interest rates coming down. So the only option is for prices to come down. So, but we shall see. I don't have a crystal ball, and I'm way over now. So anyway, any real quick questions? All right. Well, yeah, I should have them by now. All right. Thanks. Thanks for bearing with me, Andrew. So y'all have a great weekend, and we'll see you all in the next go around. God bless. Bye bye.